Hey, welcome everybody. Good morning. Um, Before we start, I do want to go over the giveaway. I don't know if people joined the giveaway already, but there are two giveaways. One is the Instagram page. Everything in the Instagram. Let me go ahead and move that over here. Um, and then obviously then there's this. So I'll just go ahead and go over it real quick. So the me and Lex Waves, we did like he had hit me up because he was like, hey, like I have like these spare monitors I'm not gonna use anymore. And they're expensive monitors. Like if you guys know um what the ultrafine monitors are from LG, they're very expensive. They're like LG's competitor to like the Apple display or something like that. But yeah, they were very expensive, and like he knows that he wasn't gonna get any money for them, so he just said, hey, like let's bless some people, let's give back to the community, and let's start giving away, or let's give these away, like we'll just do it in the US, and then kind of just figure it out from there. And I was like, yeah, fuck it, let's do it. So the we're going to be giving out to 15 different winners, but we also I also released uh the LGC blueprint. And where is the LGC blueprint? Right here. So if you guys have not checked it out already, I have put this here. Oh wow, you guys can leave reviews. That's cool. Oh fuck this guy, whoever this guy is. Fuck this guy. Give me 4 star. So this is cool. If you guys could leave that here, really cool, really cool. I didn't know you could leave reviews for this stuff. That's cool. But yeah, whoever this guy is, fuck him. But if you guys want to check this out, I made like a full blueprint. Let's see if I could pull it up really quick. Yeah, it's right here. Yeah, I made like an entire framework for the LGC model. It's about 20 pages, and then um I put what makes it an A plus, what makes it non A plus. I couldn't really rate the like it's really hard for me to rate something in terms of classifying something as A plus, A, B plus, B, C plus, C. It's really difficult to do that because different confirmations can have different levels of importance, or a different amount of significance depending on the condition that you're trading in. So like trying to get all of that down is then difficult. So I'm like, okay, let me just write the perfect setup. And this is the perfect setup. This is what would make this not a perfect setup. And then from there, you guys can kind of just work on it, build on it, etc. So if you guys haven't, I put like definitions for solidified points here, this and that. But I wanted to release this at the same time that we did the giveaway, so I can make sure that everybody at least gets something, you know? So if everybody gets something, then right, then the giveaway is automatically a win-win for everybody, right? So I released that, and then we're doing the three monitors. Those are only for the US. So like if you're in the US, feel free to sign up for that. I'm gonna like, where's the link? Right. So just feel free to fill this out. If you like, I already saw this one guy like put like he's from like the UK putting his UK information. Like, bro, come on, like this is only in the US. If you put any address, or not even any address, but if you show that you're from any country outside of the US, I'm just gonna delete it. Like I'm just delete your entry. Like, but so far, let me actually check for you guys before, because if you guys aren't in this, I would get in this because I think we only have like 20 people signed up, and I'm like, there's three monitors, so like those odds are really really nice. So, um, no, no. You guys, UK guys cannot enter on the monitor giveaway because I'm not shipping a monitor overseas. Like what happens if I ship it to you overseas and like it comes in broken? Then it's a waste of over $1,000. Like, um, the rest of the price is, let me get to it, bro. Let me get to it. Hold on. Like, unless you want to read this, I don't know if you've read the post already, but hold on. I'm trying to see how many people have been on here. Yeah, it's only about 17 people that have joined. So if you guys are from the US and you haven't signed up for it, I would sign up for it. I mean, if there's 20 something people that sign up for it, yeah, it's only about 13 because I had to delete one. This guy that signed up from like the UK. I'm like, but yeah, I have people from Miami, Austin, Dallas, Longview, Houston, San Antonio. So feel free to put your info on there. And yeah, like I said, we will probably announce these winners in 2 weeks, I believe. In 2 weeks, this will go on for yeah, 2 weeks. And on the 23rd on the Zoom, which is 2 weeks from today, we will go ahead and announce these winners here live on Zoom. Um, but when it comes to everything else, I am also giving out like I'm giving out 3 copies. Oh, and also everybody who wins a monitor gets a copy of the first blueprint, which is like 100 something pages. And then we are giving away 3 times the first ebook, which means that that doesn't count with these. So these are 3 winners, and then 3 other winners will just get an ebook. 4 other winners will get the fundamental, and then I'm gonna give out a bunch of discount codes too. And to get into the anything that's not related to the monitor giveaway, that's all through Instagram. I'm gonna be doing that all through Instagram, and that would be here. All right, so just read the rules, guys. Like it's not difficult. Like if you don't follow all of these rules, like I actually like I have it set. Like I found like this website that will just do it for me. Like it just checks if you follow me, if you like and repost, if you tag traders, um and if you and I can probably cross check to see if you're in the Discord or not. So um there isn't that many people on here. Actually I can't see that. That's weird. Yeah, there's only about 20 people that have submitted any kind of comment. So out of those 20 people, if those people aren't following any of the or aren't following all of the requirements, they'll just miss out on the prizes. Like it's really not that difficult. So if you guys want to be a part, and there could be a case where someone wins 2 prizes, like especially with the amount of people that are on the giveaway, it's not that many. That's why I'm gonna run it for 2 weeks. So if you guys follow all the requirements, there could be a case where you come out with 2 ebooks and $1,000 monitor. So that would probably be everything in terms of the giveaway. Are there any questions, concerns with that? I think it's pretty straightforward. Pretty straightforward, right? Cool. And then if you already have like the ebook that you win, then you can just like DM me and we'll figure something out. I don't know. But I am not giving away the sweet blueprint. I'm just not giving that away. Um, but yeah, I guess that concludes that. I want to go here. Like it was best. Like I don't want to speak in this type of hypothetical, bro, because like you're sending me one image. So therefore, if I'm looking for a position here just off of one picture, I don't know where we are on. This is M1 is like not to mention it's M1. Like you're not giving me much to work here, bro. Like whoever sent me this, you're not giving me much to work with here. You're sending me an M1 image with about 2 hours, three or about a day's worth of data. I'm just like, that's not enough for me to conclude when it theoretically would make sense to take a position. For the repost, no, just repost it, bro. It's the repost button. Just repost it. But it's tough to say when this would be a theoretical buy scenario because I don't know if this is coming from a bullish move and this is like a pullback, or I don't know if we're coming back from consolidation and then maybe like a bearish move, which means this would be an overall reversal. So like if you don't give me that context, like I can't really I can't really help you here, bro. Like like there's not much I can say here outside of like what I would see in hindsight. But in hindsight, like if I was to take the same scenario, like I said, depending on where this price is coming from, it would influence the result. So um whenever it comes to this solidified high to solidified low, this is just a trend continuation into the downside. But like if I'm looking for this high, um this would not make sense yet. Unless you're going for an aggressive approach. Yes, you can say that we are probably seeing unwillingness here. So if you are to take to measure this as unwillingness, the reasonable target for taking this would be here. But if we're aiming for this high, then realistically we would need this to break as a CBOS because technically we are still bearish. But once we have, right, this internal sweep here, and then we have, right, this sign of unwillingness and the full break, then this would be the justification to aim for this. Just based on what you're showing me, which is not much here. So let me go ahead and just drop this quick note here. If we were to break that, and then we were to have an SD here, then this would be the entry, this would be the target. But if I'm aiming for this, that's bad. Right, if I'm aiming for that, then I would need to wait for this transition, CBOS here, this transition, and then use this as a reference point to go higher. Right, so this would be SD, and this would be, I guess you could consider it a type of SD too. This is a bit confusing because it is technically a flag. So like I said, this is just hindsight though. This isn't beneficial to you. Like unless you're already experienced with everything, this won't be beneficial to you. So next time you got to give more context and like don't be so lazy with the question, man. Like it's like just dedicate an extra 5 minutes to write in the question. Here we go. Let me just send that screenshot. All right, so that would conclude that. I don't know if you have any case studies for later. But anyways, we'll come back to that. So, like I said, I made a small, video. I think it's like 15 minutes. Let me see. It's about 12 minutes long, so I'll probably post that later today. And yeah, I'll probably post that later today. But if you guys want to just like a quick review of this, we are sweeping. Actually, I'll just show you the before after, and then I'll just go into the trading view here. So that was the before after. If we're looking at this, the general consensus of this is we are sweeping equal highs here, relative equal highs here from a daily POV. But obviously, we can't just take a sell after we sweep a daily higher low. Excuse me. So if we go to H1, H4, we are also sweeping, right, a very clean set of equal highs here. So if we're sweeping equal highs here, and then we're not only taking that structure, but then we're immediately coming back and taking out the internal buy to sell or the internal range, which would be maybe on an M15. So the reason why this is important and not this is because this break is just a CBOS. So think of it like this. This break is solidifying this high, which means that it is the pullback of low, high retracement. So this is the internal reversal BOS. So once we have the internal reversal BOS, excuse me, then I can now assume this to be at least the beginning of the bearish momentum based on this high and this low into this high. So we're rejecting the swing time frame liquidity points, but then we're using the minor intraday transition to try to time, right, a scalp execution to then go based on or go to then TP on the minor swing or any type of swing target, that being here, if that makes sense, guys. So pretty much using 3 different levels. I'm disregarding the major intraday because the major intraday here is technically bullish, that being this. But if I wait for this to align, then I'm already here. I'm already here. So if I'm already here, then there really is no position right now. Right. So that's the biggest problem that I will continue, that I will always say. It's just if you're trying to align more than 3 levels of structure, because here I'm aligning the scalp, minor intraday, minor swing, and yes, the swing is technically daily. I mean, the swing is technically daily. The swing daily is technically bearish, right? Because technically, if we're looking at this, like this is technically a bearish trend, but this alignment isn't relevant to me because I'm not looking to take this low out, right? It's not relevant to me. So I'm more so just worried about the liquidity being taken to then help me time the smaller time frames, that being my swing, and then my intraday time frames. So although my major intraday is going against me because this is still bullish, this has to be bullish in order for me to justify liquidity being taken from the minor swing, major swing, right? And then I'm just using the scalp time frame to give me a entry position. And this was actually an LGC. If you guys can see here, LGC. That's an LGC that's bouncing out of a buy to sell. That's why I consider this a solidified high, and this is a protected range. So if we have the solidified points as a protected range, then I can just use the buy to sell. And that was my entry. Right. And then once we started to see this move here, technically it's an LG, so my invalidation is there. So once I have the LG, so I would only really move my stop if I have an LG, or if, right, the counter leg is taken out, which is obviously taken out here. So that justifies me to move my stop. And then as soon as I then have this internal transition, I then see equal lows here being swept. I actually started to move my stop here because I actually anticipated this to be a bullish scenario because we are sweeping equal lows. We didn't tap the sell to buy, but we were able to get a reaction to the upside. That's why I knew that if we broke here, then this would more than likely be bullish, and we can assume more upside, which would mean that the major intraday level of structure would then be viable. Right. So that's why I moved my invalidation there. But this is actually such a clean continuation after we saw that fail, because technically, although this is potentially a sweep here based on that, the internal structure is still bearish. So this would have been your buy to sell invalidation here, like I said. And there's actually an LGC here. So that would have even been another entry to go lower. I just wasn't able to get that. That was actually right in the heart of New York too. I'm disappointed I did not get that. That would have been a great re-entry. And then from there, it just kind of started to roll over. Roll over. We then have an LG here into the downside. So once this happens, then this is another invalidation here, another invalidation move. And then obviously then we started to get here, and I actually took a second position here. I explained this in the video. Because we didn't sweep the slow, I was a bit concerned with EU sweeping its relative low compared to GU. So I put my invalidation here because this is another LG. And then from there, I'm just looking for a 70% retracement. So I just put a very minimal risk here. And I ended up just breaking even around, like, once we broke this, I think. No, I'm sorry, this. We broke that, and that was my new invalidation because we had a continuation. So just assuming that this would kind of just roll over here. So then this came back, stopped me, or I got my invalidation hit there, which is my break even based on that buy to sell 71 retracement. But my overall invalidation here was not met. So luckily this hit TP. All right, does that make sense? And then I also covered EG a little bit of EG. Pretty much something supporting the bias of GU was the fact that we swept a very important low here on EG. So I would at least anticipate us to return back to here. So this would imply that GU would go down. Right? Any questions, concerns there? Does that make sense? Any questions, concerns on that? No? Yes, no, maybe so. Cool. But yeah, back to the chat here. Um, Crazy. This I don't know if you guys saw Victor's trade on GJ. I think it hit TP or it's about to hit TP. Where is that? Yeah. He actually took a buy position here, and that was very viable because Yens love their Asia session. So I know he posted this stress test. Where is it? Very nice. It's cool. This kid's like 17 years old and he's like already trading. That's really cool. Um, but yeah, he took that, stress tested, pretty much a multi-level LGC. Like he's using the LGC, then adding an extra level of structure to confirm it. Um, and I think his position was like here. So yeah, very good. Seeing a 17-year-old do that's really, really impressive. I feel like it's easier to teach younger kids too, by the way. But an ambitious young guy is gold. Um, but yeah, that's pretty close to hitting TP. But if he's in the call or anything, I would recommend you to close this before the end of the week. Um, but yeah, let's go ahead and see this now. I think we got a case study. Cool. Okay, so this is a good transitionary position because you're aligning. You're for one, this is technically bullish. We have CBOS, then low into high. Once that is broken, you then have a solidified range after this break. So you clearly have a bearish range. So now you would just need the alignment here. And the alignment comes if you want it to be super conservative, you would have to wait for this to break. But honestly, I think I'm being picky here because this didn't take any level of structure. So if I'm to be now bearish or transition to bearish here, then obviously this, because this is the last time we broke a high. So now that we're breaking that high, if we're breaking this, then although this is semi-aggressive, it's justified because you have a POI, you have a bearish range, and you have a reaction to play off of. But I believe you waited for this reaction to give you the high momentum move, and then I think you just took it off the buy to sell here. So this is actually very good. And then there's like actually another LGC here, if you see that. Another LGC there. Very good. Mm, nice. This is a continuation technically, but although we do have a CBOS, the internal is technically bullish. So you technically are not bullish or not bearish, sorry, until that breaks. So I would have waited for that to break because if you wait for that to break, um, let's say you wait for this to break, then you actually have a buy to sell to reference. All right. And then this could have been TP1, take off some position there, and then either go break even because there really is no place to move your stop. And then as you can see now, there would have been an LG. So this would have been a good short stop. And then from there, there could have even been another position there, but I do see this continuing a bit lower. And this is still technically bearish. Like, what is this? Euro pound? Yeah, Euro pound. So yeah. That's still good though. I like this guy's good at reading the transition. It's very good. OFD, I would say I don't like, yes, there's three things that could happen to POI, which is like the open 50% or the break or the LG of the POI, but I would prefer to use something like this. Then you see a structure break, and then you see the break. That would be full OFD. And then that way you can then use the buy to sell. Like, I don't know how to say that. I don't know if like I don't need it to be perfect, but I also feel like it has to make sense um as to why. Like I find that hard to explain. Maybe that's just a bit of an intuitive thing that I'm thinking. But I would much rather use the sell to buy because that is the last time you broke structure here. You could even use this sell to buy if you really wanted to be uh a bit picky. With that sell to buy that led to the move, which led to then unwillingness. That's correct. And then kind of just use this to as a reference point for the POI, and then you have the OFD. So the OFD, although we didn't close below, that's why I don't like the close below rule. I like the momentum. So then you could just use the final buy to sell as an entry. So this is very good, bro. Very, very good. I like they're using the indicator too. Very nice. Very nice, bro. Very nice. I like this. This isn't a model per se. This is not like this isn't one of the models, but this is just like a good continuation. Like I was uh I was talking about this in one of the breakdowns. Like, for example, this isn't a model because there is no LG, there is no OFD, there is no SD, there is no sweep. But there's something I was talking about. I think it was in one of the reviews this last week. Who here remembers the old school, like the old OFC model, the order flow continuation model? Who here remembers that? What is the close like? Like a close, but like I don't like when like I don't like the rule of like it's not one of my rules. That's why I say I don't like it. The close below, like let's say some people will say that this is a confirmed break of structure if you close below. That's like a rule that I've seen around, which is understandable. Like I understand, I get why people do that. Um, I just it could be a preference thing, but like um different time frames will show you different things. So like what if there's a M1 closed below here, but then the M3 is like a wick back. So that means that the close rule or the close candle rule would have to be dependent on a time frame. That was like the only thing that I had about it. So like I just thought that was too vague. Um, but yeah, who does anybody remember the old school OFC model, the old fourth model? This is like it's been like 3 years since I like stopped using that model. Does anybody in here remember that model back in the day, OFC? It was pretty much when you had like a model and then it was like the continuation afterwards. Does anybody remember that? Yeah, it's OG, OG. I haven't used, I stopped using that model. It wasn't specific enough for me. Like I hadn't put enough of a rule set for it to make it viable. But really, nobody in here remembers that model. Nobody here knows that model. Really? You guys must be new then. Or actually, I don't even know. That might have been like 3 years. No, it's no way it's been 3 years. It's definitely been like two. Yeah, back from the old group. Yeah, yeah, yeah. So the old school OFC model used to be the old fourth model. This is before the sweep. So this is like 2022, maybe. The sweep first started being used like in 2023-ish. But pretty much let's just say you had one of the three core models, LGC, OFD, SD, whatever transition that may be. And then once that model is like complete, let's say you don't get an entry, a re-entry based on that model. So then let's say you now have a structural range, and then you kind of just take the continuation of that. That's the old school OFC model. So I have an idea for content this year where I want to build a model, like just a free model for the public, and it's like a refined version of that. And like the first schematic, this is like I'm pretty much just gonna give away the model, but whatever. It's an LGC into a Fibonacci retracement where the model itself is essentially where you have, no matter if you're coming from the upside, but let's just say you have an LG and then you have a structural range in play, and then you just take the 71 retracement. That's pretty much the model. So like it's pretty much sweep, LGC, structural range with momentum, and then continuation. Whereas the continuation is based on a 71 retracement, and then the target is obviously previous high and then external highs, or better yet, like the 32 retracement. That's like the model that I'm trying to work on for this year, and just kind of maybe make that like a free public model. It's actually extremely viable. If you guys actually go look into it, it's because pretty much what we're doing from a logic standpoint is we're waiting for a reaccumulation, redistribution, a accumulation or distribution via sweeping. Can you mute your mic, whoever that is? Yo, come on, Lazo, come on, bro. Pretty much we're looking for any type of LG, any type of sweep, any type of confirmed liquidity grab that that is either a continuation or a reversal, and then you wait for momentum to come into play, and then you just trade the 71 retracement. Good example was like UJ this week. Like UJ was very, very good with this week. So, right, this is like a reversal standpoint. So you guys remember that we were bullish on UJ like late last year. So, obviously we break structure. We're technically bearish. We then sweep this. So this is a viable bearish scenario. And then we have structural disruption, that being the LG in place. So the LG in place now means that you would then wait for the full transition. And then this is technically, right, a OFC, a continuation model to the upside. Or we could also like zoom in a bit and take a second potential model where we're kind of using an LG here. This is a lot cleaner. I like this a lot more, but pretty much you have the LG, high momentum. High momentum is key. High momentum into 71 retracement, then 2 TPs. Because the sweep itself, the LGC, is a example, or it's a framework of I don't know if you guys remember this term as well from back in the day. It's like showing its hand. Like you want price to show its hand. You want it to show itself, and then from there you make a play. That's why like I'm not a fan of having a predetermined bias. I'd rather have a reactionary type of approach, because I don't really care what direction it goes, because I have protocols for both sides, whether it's a reversal continuation. So I let the framework kind of just wait and show itself to me, and then I play based on that. So this is actually a very conservative model. If you can align certain levels of structure, and then you can just wait for some type of sweep, and then momentum, and then the 70 retracement. So it's like making a liquidity version of Fibonacci retracement, if that makes sense. So it's pretty much like LG, momentum, Fib. And then you obviously target, like preferably you want to target like the negative 32. That's like the target. That's like the priority target. Because then that equals to like 1 to 3 point, either a 3.33 or a 4.44, something like that. But like obviously the 70 is just like it's just a retracement number. So there you could also reference like sell to buy zones and stuff like that. So see like a 3.5-ish. But you could also align it with other levels of structure, and like that would then scale a bit higher. So it's aiming for like at least a 1 to 3 into a 1 to 4, etc. And then obviously if you add layers to it, different time frames to it, then it can scale up to higher, like 1 to 7, 1 to 8. But you guys already know the consequences that comes with. But yeah, that's like a content idea I have, like building that model and maybe creating like a database. Who the fuck knows? And then I also have like I have a couple other ideas. I'll go over that like after we finish the case studies, but it's a really, really cool idea that I have. Let me get to the ones that are in the chat. Sorry, man. Sorry. You don't have a name. Backspace. Call you backspace. Cool. Let me widen this. Widen this. Also, do you guys like the format on this better? I don't know if I used this last week. Like I'm using my second monitor, not my ultra wide. This is much better, right? For formatting. Yeah. So what is a CB? What is a CB? What is a CB? CBOS. This is, yeah, CBOS, CBOS. And until one of the lows breaks, that solidifies the high. So you can see here this low is broken, so that solidifies this high. That confirms that low. So here this buy is not justified because you're chasing the reversal. So it's a CBOS. So it's right. So CBOS. Right. I don't know if you want to help me out here with what we're seeing. I would also recommend you, bro, try to use like a brighter color for these bullish candles. Because maybe it's just me. No, 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 definitely no. It's a bit too dark. Because the reason why I say that is because sometimes like I like to have colors that contrast my background so that I'm able to see stuff that kind of sticks out a bit. Um, like for example, this area sticks out because this blue is sticking out, so there's clearly a gap here. So that could mean something in the future, but I just like to have things stand out based on the colors that I use. That's why my colors right now are green, I like the green because it complements my blue light glasses. But just a quick tip there. Um, so I like this. I did see this EU trade last week. But this I didn't like it. Because there's no entry. So that's fine unless there's maybe a tap here, but there's also no entry here. So I kind of just passed on this entire scenario. Um, but when it comes to it's really hard to see your colors, bro. Uh, I would, yeah, it's a bit hard to see your colors here. So let me just go on to the next picture. Oh, this is the stop. Oh, I thought that was the TP. Sorry. So here, I see now. I see. So you're looking for a sell here. Okay, so for um, one of the biggest killers of like a lot of my trades is high momentum. High momentum is like one of the biggest things that just kills my trades. Um, and I will die on a hill over that. Like if I see high momentum before a trade or before something, then the only way I'm gonna force an execution is if we see like an LG. So then I have a buy to sell to reference, that being this, to then go lower. Right. That is like the main thing there. Here, I mean, I don't know what other time frames you're using for this, bro, but where is this bias coming from? Because if we now see this, right? If we see this bearish move down, this is a reversal BOS, by the way, from if we're looking at this based on this time frame, that's a reversal BOS. These are CBOS, right? This is a reversal BOS, but it's a CBOS from a M15, M30, right? Just due to fractality. So when I'm seeing that now, I'm seeing this is bullish. So I cannot be bearish until this breaks. And if that does not break, then I cannot be bearish. So like if anything, I'd be looking for an LG and then look for the buy. You know what I mean? Um exactly. See, exactly. You look for the LG and then the buy. Like you see the LG and then for the buy. Like exactly.
Hi, Fredo.
Hello.
I guess what I was trying to figure out was this which solidifying point to use. So as you can see the red and the gray point highlighted, I wasn't sure which one to use. Um,
How
that's
many time
why I
frames are you using?
was, huh?
How many time frames are you using?
Um, I don't. I guess just the higher time frame and the lower time frame,
What
just
does that mean?
to find the external direction,
But you
and
see,
then
I'm asking you that because you need to have set, you need to have set time frames. That's why I built for example, I built my indicator. That means that these time frames mean this structural level. So like if I want to look for a major intraday position, then I'm looking for an entry at a minor intraday, and I'm looking for a TP at like a swing higher low or a major intraday higher low. Like that needs to be because people can say that they use higher time frame, lower time frame, but like what does that mean? Like that's in theory, duh, yeah, but like
mm,
in practice, like how like what time frames are we actually using?
um,
So like when you're saying this, what solidified points? Like for one, I would just delete all of this stuff and like delete everything. And if you want to focus on specific solidified points based on a time frame, highs that create lows, always highs that create lows. So like when was this? January 6th. So let's look at this. We're looking at M5, January 6th. So we're about here, right? This is kind of where we were. So like if you're asking me like what's solidified points, well, it's not about solidified points. Solidified points are a lens to read a structural range, and the structural range will tell you the direction. Um, like people put too much emphasis on like solidified points but solidified points are solely the lens to understand what a structural range is. So like just based on this image here, like what highs create what lows?
uh, a break from a
The
right a
what high leads to the break of a low? You could point out anywhere from here to like here.
um. I'm on my phone right now. I don't know if I could draw it
Oh,
or
okay. I don't think you can draw. Okay, okay. So I'll just make it easy. So if we're looking at highs that break or highs that lead into lows and lows that create into highs, then if I'm looking for a high that leads into a low, then I have to see when a low is being broken. So what led to this being broken? There's two highs. There's this high and there's this high. This is the immediate break that led to that, but this is the overall break that led into that. Why is that overall break important? Because this is the last time that we broke any type of high. Therefore, this is a higher time frame solidified point. This is a lower time frame solidified point, right? And then obviously this break is a CBOS. So this is a CBOS because it is the initial break of that. And you could even say this is also a CBOS, but that would be the CBOS of a internal leg. So that's three levels of structure there, right? So you have the micro, the scalp, and the minor intraday being there. So like whenever you're trying to ask me like which ones do you use, well, I just want to look at overall what high led into what low. So I have to reference solidified points, which is like obviously it's a high, then that this break solidified that high, and then this high obviously was never fully broken. Therefore, once we break this low, this is now bearish because this high led to the break of this low, and then that continues. Then this is the first time we're starting to break any type of structure. So therefore, this is now a solidified low, solidified high. This is a CBOS. This is now the pullback high, and this is the pullback high because that broke this. So we have an internal range. So then once we have internal breaks here, then I now need the justification to look for a position here, which is a sell because we are bearish. And like there's different ways to go about that. It's like you could use you could use Fibonacci, like T71 retracement high, low retracement, but the solidification occurs based on this break, right? Because this internal break would only solidify the internal leg, which would be this leg, which that would be AM3. Right here. So like, so you see how there is the higher time frame, which would be the M5, but then this is the internal M3. So therefore, this break solidifies this low as high, low, right? But there is no transition here, so I can't really justify that. But when I'm looking at the overall leg, I'm looking at high into low. So this is the solidification of the low, and this is the solidification of the high. So then you continue structure. All right. So like, does that answer the question? Like, because like people put too much emphasis on solidified points. Like, yes, it's like probably my secret sauce, but like it's only a lens to reach structural ranges, and then you have to collaborate different structural ranges to find a directional bias, and then you find a model to execute on the bias. Does that make sense?
Yeah, yeah.
Yes or no? You can be honest. You can be honest.
So I understand that, yes, it's all about solidified ranges, but I guess
Structural
I,
ranges, not
uh,
solidified ranges. Structural.
okay,
Structural.
structural ranges.
Uh,
I don't know. It's just, I guess I just need more practice, right? This is all
no, no. That's no. Practice does not mean perfect. Practice means permanent. So if you practice bad habits, you're gonna be permanently a bad habit. Like you want to solidify your rules, just like you want a solidified point to solidify structural range. You need to solidify your rules to understand the concepts that you're trading. Right? Like that's why in the LGC blueprint, like the free book I gave out, like I gave out the definitions uh for a solidified point. Like you sound like you sound like this guy that came from me from Azarel. You sound just like them. Let me
Oh,
see. Um, let me see. So I have these. This is free. This is like on the Discord. Um, and so I gave the definition for solidified points, and it's just like a solidified point is the mechanism that allows us to read market direction objectively, right? And obviously, like I'm just trying to sound smart there. Really, it's just the lens to read a structural range. So like that's why this solidified high is solidified based on the break of the internal low. But like if you want to say that this break is what solidifies the high, then you're talking about an internal level of that.
yeah,
So
that
like
makes
you
sense.
always
Yeah,
you see what I'm saying? Because then let's say this is the M5,
I
then
understand
this
that.
break, yeah, this break would be like an M1 and 2 type thing, right? So you need to every whatever it is that you use, you need a concrete rule set. If you don't have a concrete rule set, then you're kind of leaving stuff to be assumed. And if you leave stuff to be assumed, then you're taking a discretionary approach, not a mechanical approach. So a discretionary approach is a bit harder to track because you could take like a bad trade, well, like a loser's a bad. Well, I don't like to say bad or good. Let's just say you take a losing trade, but you can't really you can't really say why you lost it outside of your judgment. But if you have a rule set and you follow the rule set, then you can start to see why exactly you lost a trade. Does that make sense? So it's not that you need more practice, it's just that you need to solidify your rules. Like you need to have a clear rule set of everything that you're using, how you read structure, how you read liquidity, how you execute on a trade, and then just kind of make the map from there. Because then it's like trade management, risk management. It's just you can build like a little tree.
I've learned from what I've seen from you. Uh,
Uh-huh.
is I would say like make my own rules. I don't know about that. I just know what you shown. You know what I mean? Like
No. I'm
that's
not saying to make your own rules. I'm saying to note the rules that you're using.
okay.
Like
Right.
just make them concrete because that way you have something to reference back to. Like making your own rules, making your own models, that's like level 6, level 7. We're at level 2 right
Mhm. Yeah.
now. You know what I'm saying? So yeah, like making
Awesome.
your own model is like down the road. And that's very difficult. That's very difficult. Like like my best traders in RCV have always have made their own models because they've just used the concrete rules to then build a different mix. But like that took years. It took years, like you know what I mean? So that's like level 7, level 8.
Yeah, I'm starting to like
Mhm.
understand what you showing us. So I'm like so close, but yet I'm like
You're
it's so
so
hard.
close to trust me, you're so close to understanding you're really far away.
Yeah,
And
right.
then once you get really close to that, you're gonna realize that you're then really far away from the next thing. It's a progressive thing. Like you could be profitable and still understand that there's so much to learn.
Thank you, Fredo.
Yeah, no worries. Um, but yeah. Let's see. Let's continue. You're trying, bro. You're trying to do what, bro? Yeah. How is that GJ trade doing, bro? Uh, great. I hope you close that before market closes, bro. You just go get your mom some lunch, bro. Go get you and your mom some lunch. Because this is probably not gonna move anymore, at least for the rest of the day. We took out this high here. Took out no, we did not. No, I did a markup on that GJ a minute ago. Yeah, man, these yens are moving real nice. Like, look at how this stuff is trending. Like, just literally hit buy and you'll be fine. It looks like fucking ES and like NQ here. I know, never trading money intraday again, ever again. Why? Hindsight 2020, I may be a bias. But like that's the thing though, bro. Like you want to build the eye for it. But like I don't want to say that's like because of me. Like all I'm trying to do is portray what I see in a digestible way and a mechanical way, which is way easier said than done. Like like it's hard to like explain shit in a way that people can learn. It's really difficult. But like if I can and you can see it and you build the eye for it, and then you can then do exactly what I did with put it on paper, put it on rules, then bingo, you have your model, right? Because where I used to mess up with models back in the day was that I didn't add context to them. I just tried to pattern trade. But like, but the thing is like everything is a pattern. It's just you just add complexity to the sequence. So like rather than just trading an LG, an LGC is an LG that's combined with a bias. So then therefore to add dimension to that, it's like, okay, well, what if I use a higher time frame sweep, which is what I did with the GU trade, like adding context. Like you sweep the daily highs. So like you sweep the daily highs, right? Here, the daily equal highs there, and then you sweep the internal highs. So like question, like which one's more important? Sweeping these highs or sweeping these highs? Which is more important? No, hold on. No. LG is not a head and shoulders pattern, bro. It's not a head and shoulders pattern. Head and shoulders is a bit different. Head and shoulders, like, well, it depends too. Like, it depends on how you interpret the head and shoulders on when you should trade the head and shoulders. Like, do you trade it here or do you trade it here? One or two. Exactly. So then it's not a head and you could say it's a head and shoulders, and then maybe if you can make the head and shoulders with the rule set similar to like what I'm using, then it could be viable. Because like I said, you can trade a support and resistance model based on liquidity and be very successful. Like support and resistance right here. You wait for the break of that, and then you see the support stop loss here based on liquidity, and then you go lower. Cup, fuck off with the cup, bro. I actually know. You know who created that cup and handle method? No. Teacup method is not a Wyckoff method. That's a good question, actually. Who made that cup and who created the cup? What's it called? Cup and handle pattern. Ah, William J. O'Neill. Back in the 80s. That's interesting. Back in the 80s. It's really cool to like use AI to like try to backtrack on these concepts. That's why I fucking despise ICT. Like if you really just look into his stuff and you just say what created this, then you see the real origin. And now you see kind of where you could start learning from. He's another case of conviction. No. ICT is not a case of conviction. ICT is a case of getting in when the internet became a thing. Like the way to become successful in business, you're either first, you're either faster, or you're better. One of the three. That guy's a psychopath, bro. I don't rate that guy as conviction because he like it would be conviction if like he wasn't exposed for like all the shit that he was exposed for. Like I consider conviction as someone who can iterate and iterate consistently. That's conviction. Mm. The conviction talk last week. Yeah, man. You gotta believe in yourself because nobody else fucking will, man. Like the second you make motivation intrinsic, not extrinsic, like you just realize how much shit doesn't really matter. Like a bunch of shit doesn't really fucking matter. All you gotta focus on is iterating. Iterate, iterate, and iterate. Um, but yeah, y'all didn't even answer my question. Like, what's more important? Think about it. Think about it. Which one's more important and why? It's a trick question. So like, think about it. Anybody else? Left or right, and why? Nobody, nobody can tell me. Left or right, and why? Which is more important, this sweep or that sweep? It's a trick question. You see, I got y'all. I got y'all. Like I got y'all split halfway. Like it's a trick question. Like it just depends on the relevancy. Like this is more relevant to a bias. This is more relevant to the timing. So like this is more so to create a frame. This is to execute on the frame. So which is more important? Neither. Both. Neither or both. Because they both serve different roles. Like they don't both serve the same role. This sweep here serves the role of looking for timing. This serves the role of creating a frame because this is still executable on the swing time frame. Because we sweep these highs and then you could look for maybe the 70 retracement, which is probably where it's hitting. Yep, around the 70-ish after that's being swept. So like exactly. So like this is to help make the frame of a scalp intraday position, but this it would be the timing of the intraday scalp position. So like they both serve their role, so neither is more important than the other. So it's either they're both important or they're both irrelevant because you could still have the trade just with this, but you may not be able to have the trade with this. But if you only have this and not this, then in a different scenario, you might have taken a loss because this would have then been low, high, retracement continuation. So they're both equally important and they're both equally important or they're both equally not important. It's not one or the other. That's why it's a trick question. You see what I'm saying? It's cool to think about. It's cool to think about. It's a trick question because they both serve different roles. If they serve the same role, then yes, there is then a hierarchy of which one's more important. But because they serve one to build a frame, one to execute on the frame, then they are both equally important because one without the other could cause a significantly different result, right? But because they're both collabing, that's why the major intraday was irrelevant to me because I used both and then the internal execution to void the major intraday being bullish, right? That's cool to know. I don't even call that like I don't know like um what's the term, problem solving. I don't know, like because I'm using this plus this to void away the bullish bias here because of the internal position. So it's 1, 2, 3 are voiding this one. Easier said than done, right? But like, but yeah, just it's just cool to know. And then people were talking about like AMD yesterday. I saw someone talking about AMD yesterday. Like this is a good example of that. Like, but like it's like I call it. I go by referencing it as auction market theory because that was like the original term, which is this, right? Where pretty much you see like it's the principle of sweep and then expansion. So like it's like a spring. It's like liquidity from DLE, right? Like where you have a range, a liquidity grab, and then a move. But it's just like you also have to add context to it because, like I said, like if you don't have the external, like if you don't have these highs over here being swept with these internal highs being swept too, then this may not have worked. Like look at GJ, like look at GJ, like the one that Victor took a buy on. Like this could also be interpreted as a much cleaner like consolidation, manipulation, and expansion, but it didn't work. Why? Because you have the internal, but you don't have like there's no external to reference. You see what I mean? That's why I said that they're both equally important. Am I making sense there? So you want to make these analogies, trying to make these analogies of combining like external, internal, higher time frame, smaller time frame, medium time frame, figuring out what those are, and then figuring out relationships between them. Exactly. So but yeah, I definitely recommend changing the color on your bullish candles just to make it easier on yourself. Like, just make that white, make it white, and then keep that dark. Maybe you could even keep the same blue unless they complement each other too much. Then you can make it like a red or something else. But just so you can see the candles better. Like this would piss me off if my chart colors are like this. Like I can't even see the candle. But yeah, okay, nice. This is a great trade here. This is a great trade here. Why? Because you're technically bullish, but the internal has transitioned to bearish, and this is a failed break. So once you have the internal transition here, so if you fail to break a high, then you have an internal transition, and then you take the sell. That's a sweep model because the sweep model is inherently a failed break of structure. So this is a great trade. But if you want to take this type of position with this big of stop and TP, like you're gonna have to zoom out to like H1, H4 and see if that aligns. If not, it probably won't. Like everything is very proportionate. Like how do I explain that? Like look at UJ. Like I took a break even on you, not a break even. I took a short stop on UJ. Here. Everything has to be proportionate. So like let's disregard that. So like I had taken a position here during Asia. Excuse me. Here. Actually during New York, sorry. I had taken a position here during New York. Right. This is the model that I'm trying to build for the public here is the momentum push after a sweep, right? High momentum and then pull back, no disruption. There's no break structure here, right? So that means that my TPs either the negative 32 or the higher move here. But to be safe, I'm going to make the rule to be negative 32, or maybe even I could even start testing like a negative 50. Like a negative 50 sounds pretty viable as well, which would make it like almost a 1 to 4. But the point is like this is proportionate based on the data that I'm feeding it. So like based on the candles here, we're sweeping this. I'm looking at 7 hours of data. I'm taking the position of high momentum here, which is this is a scalp. So I'm taking a 70 into the three into this, but my trailed stop was hit here because I wanted to have that high up here taken out, right? And so I got trailed stop there. So it came out with profit, but I could have just TP'd on the negative 32. But this doesn't invalidate the bias. This is just a CBOS, which now confirms the external range because this is one full range, right? On the chat or the Discord public chat. I don't really care, bro. But if I forget one, just like let me know. But anyways, so now if we're referencing this range, I can't use this time frame to make a decision, like at least not a tradable decision. Because from the M5, this looks like it's a reversal, right? It looks like we're bearish now, right? But if we go to M15 now, we're now referencing almost the same amount of candles, which would be this to that, same risk to reward, same proportions, but they're symmetrical. They're proportionate in terms of the ratios that we're looking at, right? Like the M5 data here, where I'm looking for this, it's like it's based on 80 bars of data. This 70 bars of data. So you see, they're proportionate. They're relatively the same. So you want the relativity to be the same. And the reason why candle counts is important is because once I started trying to automate everything, I realized how important that dimension is. That's why like the indicator, this, like the different modes are based on different candle counts, right? So like you want to make your trades proportionate. Yeah, measured moves, yeah. But like if you want like an appropriate number, that's actually like something that pisses me off that I can't answer, is what would be an appropriate amount of candles for a scenario to be valid? Like that's something I'm gonna work on this year. Like I can't answer that, and it irritates me because if I know that key piece of data, I now have another metric that I can leverage and use, and I can see why I potentially take a loss or why I take a win. You see what I mean? Because we love to measure risk to reward, we love to measure the y axis, but we don't measure the x axis. We don't measure the time aspect outside of like time of day. Timing will be tough to quantify. Well, I mean, timing in terms of what? Because the easiest way to time is just trade during high volatile sessions. And um, I actually, for the people that are in the private group, I made something called the cheat sheet. And one of the components of the cheat sheet, right, I don't know if anybody in here is in the private group. I talked about daily cycles. More importantly, like volume distribution. So I got all the data for all the pairs, and I measured when was the uh hold on, where is it? No, here. When does each pair move most of its volume? Like what times a day and what percentages? Like and I put that for every single asset. So like I'll make this real simple just so you guys can see. So like if we go here, like what I referenced here is I broke everything down into different time sessions, and then I put all the data for all the pairs based on like one or two brokers. And I now have the top perform like I have like a full breakdown for every pair, every session over the span of 5 years. But I'm not going to show that. Obviously, it's part of the document. But um I uh I now know that hey,
this pair moves this amount during this session. It doesn't say it on here, but let's just say it here. London Open. I'll just show this. This is the only thing I'm gonna show. It's just like for London Open, GJ moves 14% of its volume, right? And then I do that for every pair, and I do every what are the numbers for each pair, and then I put it all into what database. I don't know. Maybe I could even separate that and like I don't know, make it something that people can buy or something. I don't know. But if I that's the easiest way to measure timing is if you know when majority of the volume will come, and it's very straightforward. It's just you just got to pick a session between assets, but the way to pick the session is by knowing which pairs move the most during which session. That's why everybody trades NQ S&P during New York Open or the stock exchange open because that's when the stock exchange volume comes into play. That's why majority of people traded during that time. So timing in terms of that is very straightforward, but timing of the model is a bit different because then you can incorporate candle counts, right? You can incorporate distances, retracements. So like I'm trying to like figure out both because if I figure out both, then I can then improve or make progress towards automating the systems because everything is numbers. It's all numbers. You're chasing reversal here. This is clearly bullish. Yeah, there's no reason to be bearish here. You're trying to pick. You're trying to assume this is going to trend shift here. No, like I'd rather wait for this to break, look for a LG, and then look for the buy. Because then this would solidify the high, so you have low, high, retracement, continuation. So if the external is bullish, then I just need the internal to give me a fake or a break to the downside to fail, and then give me an opportunity to the upside. Let me pull up the Discord. Very nice, bro. Very nice. This is very nice. I like this clean chart. I like a clean chart. No, this is CBOS. CBOS LG would be if we get this. That would be an LG, and that would be an SD variant of an LG. Right? Yeah. So it didn't break. Oh, are you saying that this is the LG? Is that what you're saying? Okay, okay, okay. Then yes, technically yes, because then technically the LG would be here and here, and then this is just a CBOS, and then this would be a clear, like a very nice, like 70% retracement. Yeah, yeah. Internal LG, external CBOS. Exactly, exactly. Yeah, very good. 1 to 3, very nice, and overall 1 to 10, very nice. So you're combining. Yeah, this is very good. So this is what happens when you align external structure here, break here, and then an LG there, which would be 1, 2, 3 levels of structure. Nice, 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 nice. Mm. You see, so I don't know if he broke even here, but this is what I mean by you want to let the external leg break until I move my stop because of situations like this. So like the thing is like I wouldn't have been able to take a trade here until either this bounced back and then I aim for external highs, but it obviously didn't do that. You need that LG back in the range. What are you talking about? What part are you talking about? Which chart? The L you talking about the one before the LG? But this is a great position here. So you sweep and then the internal range is taken out. This is a great sweep. And then you aim perfect target, which is relative equal lows. It's perfect. Yeah, it's very good actually. This is very good. And even here is a re-entry right here. What do you mean? You need that LG back in the range? What does that mean? Sure. So what about that break? Like, I don't understand what you're trying to tell me here. For what to be confirmed? Because technically, like, if you want to confirm this high, this low, then this has to break to confirm this low based on the overall range. But this technically is just a CBOS internally, which would be identical to this. That's why the LG is this. Does that make sense? This guy's been killing it. Whoever this guy is, he's been killing it. Um, this is good. I see why you took the trade here. I would just put the stop here. Oh, zoomed in on. Okay, that makes sense. Cool. But yeah, I think I've covered pretty much everything. I do want to show you guys something cool that since I've just been messing with AI, let me make sure. Let me pull it up real quick. Hmm. All right, let me pull it up real quick. So this is really cool, actually, what we did here. Hold on. Sorry guys, 1 second. Cool thing about AI. Let's see. So I'm pretty much trying to put all of my information on it in terms of structure. And we're trying to create like a, how do I put it, like a, pretty much create like a bias scanner for like whatever asset, and kind of using the directional biases to signal where price will go. And we actually had a bias like really work out, and we kind of used AI to leverage like what we already know or what it already uses to kind of just see, kind of just create like frameworks. And I would love to create like a type of scanner, type of database or something that can be like used to give like a an unbiased bias, an objective bias, if that makes sense. That will use like my rules with my indicator and like a solidified point rules to give like a report. I don't know if that's something of interest for like you guys, but if you guys think that's cool, like I'm actually trying to build that for myself for one, but I could easily make it to where it's like a usage based product where just like if you only want this asset or this asset, then it would just be this per asset, like this amount per asset, per report, per week, per day, etc. Be very flexible. So that's like the power of Web3 and trying to get automation into everything. But I think it's a really cool idea with like the type of tool that it can make. And it's actually like working decently, I'm not gonna lie. Because my indicator works on time and price, distance and time. But yeah, I don't know if that makes sense. But I'm definitely gonna be working on that. Where pretty much it's not signals, it's this is the current bias. So does that make sense, guys? You guys even paying attention to me here? Like I know people hate being sold to, right? But I think it's a really cool tool that I can build. But yeah, this is pretty cool though. So I believe Friday, no, not Friday. Um, see. When was this? When did we first see this? Trying to look for this message. Oh, here it is. So this is the report of like these images. So pretty much use my indicator to build a bias and give a score based on what time frames give what. This is what that means. This is what to be cautioned of. This is what the bias would be, what the cautions would be, what we would look for. And this was on Monday. Right? This is Monday. These are Monday's stuff. So using this created this result, which was the change from January 5th. We raised 30%. So we want to build this for I'm probably going to make this like an add-on with Cove too, because Cove will have auto traders and it will have, especially with the trader tier, and just a lot more tools. But I could also make something like this for RCV and either make it like a subscription and you can subscribe to whatever reports for whatever pairs and then go from there. But I don't know, what do you guys think? Is that cool? Is this cool? Like, is it making sense what I'm trying to explain here or no? You should start a hedge. Bro, you have no idea the first thing about a hedge fund. Trust. I mean, it's in the works for the future, but like, creating a hedge fund and trading professionally and from a retail POV are two completely different things, bro. Like you don't just get like 50 million in capital and we're still trading the same way. That's not how it works. But it could be a possibility in the future, something decentral, like a decentralized hedge fund, maybe. Um, make it open source, make it for the people, ASEV. I mean, I want to incorporate ASEV into Cove because I have more control over Cove, and Cove is a bigger vision than ASEV. ASEV is just automations. Like all it is automated bots that we make, but those can be licensed. So that's like the upside to it. But like with Cove, I have a whole lot more control, a lot more. I can build products. We can train models. We can build like a brain. You know what I mean? There's a bigger vision with that because the point of Cove is to empower. Let me see. If I was to put it in one sentence, let's see. Hopefully this doesn't pop up here. Okay, cool. If you were to put it down, what is the point of Cove? You want to empower the sovereign. You want the sovereign to not be controlled by any jurisdiction. Because that's where we're headed with tokenization, like, believe it or not. You created ASIV with Cove? No. No, no, no. They're two different entities, bro. Two different entities. But I can use the models from ASIV to train a model in Cove. But yeah, do you have any more questions, concerns, guys? Or I think that's it for me today.